Chainlink just crossed a line institutional crypto has spent years approaching. DTCC converted DTC-held U.S. securities into digital tokens and used them in live production transactions, with Chainlink participating alongside BlackRock, Goldman Sachs, J.P. Morgan, Citadel Securities, CME Group, Circle, and more than 30 financial and digital market firms. At the same time, Link supply moved away from exchanges. A stablecoin with more than $1 billion in total value locked adopted multiple Chainlink services, and institutional tokenization moved closer to commercial launch. Today is July 22nd, and Chainlink's infrastructure story has moved ahead of Link's price. That gap now defines the market. This week's Chainlink story came down to four forces. Tokenized securities entered production, exchange supply contracted, Chainlink expanded across stablecoin data and reserve verification, and Link held its recovery beneath breakout resistance. Together, these developments show Chainlink becoming part of the operating layer for tokenized finance. The infrastructure position is taking shape. The next confirmation will come from recurring usage, economic throughput, and measurable demand connected to the Link token. Link entered July 15th near $8.54. Price reached approximately $8.62 following the DTCC announcement, before moving lower across the next two sessions. By July 17th, Link traded near $8.01, establishing the weekly floor. The token recovered across the following sessions and closed July 21st near $8.60. That placed Link back near the upper end of its weekly range, while the full move between the July 15th and July 21st closes remained below 1%. The institutional story accelerated while Link remained contained. Support formed around $8 and resistance formed near $8.65. A sustained move through that upper level places $9 back into focus and converts the current recovery into expansion. The market absorbed a major institutional development and kept Link near the top of its weekly range. That signals resilience. A larger pricing now depends on measurable economic activity across Chainlink's expanding infrastructure. That institutional position is strengthening. Positioning strengthened beneath the weekly price action. Sentiment data cited across multiple market reports indicates that more than 15.7 million Link left known exchanges over the previous month. That represented an approximately 12% reduction in exchange-held supply. Another 1.04 million Link reportedly left exchanges in a single day during the weekend. These figures come from secondary reports citing sentiment, so they remain attributed positioning data. The direction still matters. Exchange-held tokens represent immediate market liquidity. As those balances decline, liquid sell-side supply contracts and the broader supply profile becomes more constructive. Three forces are now aligning. Exchange supply is declining, institutional adoption accelerating, and Link is holding near the upper end of its weekly range. Together, these forces indicate accumulation ahead of full price confirmation. The next stage depends on economic throughput. Chainlink creates token demand through recurring service usage, network fees, staking requirements, security functions, and payment activity connected to Link. Each integration expands the infrastructure footprint. Recurring usage converts that footprint into measurable economics. The strongest development came from DTCC. On July 15th, DTCC converted securities held at the Depository Trust Company into digital tokens and used them in real production transactions across operational financial market workflows. The transactions included collateral pledges, securities lending, treasury and repo delivery versus payment transactions, equity delivery versus payment transactions, equity token transfers, and central counterparty margin activity. More than 30 financial and digital market firms participated, including BlackRock, Goldman Sachs, JP Morgan, Citadel Securities, CME Group, Circle, Chainlink, and other major institutions and infrastructure providers. The digital conversions occurred across DTCC's private Besu network and the Canton network. That multi-network structure reflects the direction of institutional tokenization. Banks, custodians, asset managers, exchanges, and market infrastructure providers will operate across systems with different privacy, compliance, settlement, and governance requirements. Those systems need trusted communications, verified data, secure asset movement, and coordination across public blockchains, private networks, and traditional finance infrastructure. Chainlink is building towards that role. DTCC confirmed Chainlink's participation in the production event. Service level attribution will depend on future technical documentation, while the confirmed participation already carries weight. Chainlink was present when tokenized U.S. securities entered live production activity across major institutional workflows. DTCC plans to launch its tokenization service commercially in October. July established production capability. October will establish commercial continuity through recurring transactions, expanding access, broader participation, and deeper interoperability across financial networks. Institutional adoption also expanded through United Stables. The company selected Chainlink as the official data for cross-chain infrastructure for its EU stablecoin, which surpassed $1 billion in total locked through within 3 months. The integration includes Chainlink data, feeds, and proof of reserve, while CCIP support is planned for future cross-chain movement across BNB Chain, Ethereum, and Tron. A live U2 Chainlink feed already supports market data for the asset. This deployment combines price data, reserve verification, and cross-chain distribution inside one infrastructure stack. That combination reflects the direction of Chainlink's institutional adoption, as customers use multiple services across the same financial platform. The technology story supports the institutional one. On July 14th, one day before this reporting window opened, Chainlink added CCIP support for the Canton network. Canton became interoperable with Ethereum through Chainlink's latest CCIP architecture, providing important infrastructure context for the DTCC development. Tokenized markets will operate across public blockchains, private network, institutional ledgers, and traditional finance systems. Those environments require trusted data, secure messaging, reserve verification, compliance controls, and coordinated movement of information and value. Chainlink is expanding across each of these functions. Data feeds remain foundational. CCIP connects networks. Proof of reserve verifies backing. Smart data brings institutional-grade information on-chain. Identity and compliance tools support regulated activity. The Chainlink runtime environment coordinates workflows across systems. Together, these systems position Chainlink as an orchestration layer for tokenized finance. Market sentiment has entered a more demanding phase. Production activity now carries more weight than announcements. Recurring volume carries more weight than participation. Fees and token demand carry more weight than integration counts. Chainlink has established infrastructure relevance. Link now approaches the economic confirmation stage. The restrained price response shows the market waiting for usage, revenue, security demand, and visible economic activity before assigning a larger premium. Chainlink now has 3 confirmation signals. The first is recurring institutional production. DTCC's planned October tokenization service launch is the next major milestone. The July transactions establish that tokenized DTC-held securities can support multiple production workflows. The October launch will measure continuity through more transactions, more assets, more participants, and deeper interoperability across financial networks. The second signal is price expansion. Link recovered from approximately $8 and returned to the upper end of its weekly range. $8 protects that recovery. $8.65 opens the breakout. $9 confirms expansion. A sustained move through that structure would show the market assigning a larger premium to Chainlink's institutional position. The third signal is economic demand connected to Link. Chainlink's institutional footprint is growing. Its data services are expanding. CCIP is connecting more networks. And proof of reserve is becoming part of stablecoin infrastructure. Tokenized securities are entering production environments. The next confirmation will come through recurring fees, staking demand, security requirements, service payments, and visible economic activity connected to Link. Now, understanding a week like this requires more than following Link's price. You need to understand how market structure, capital flows, infrastructure adoption, token economics, and sentiment connect. That's exactly why I wrote Understanding Crypto, a clear guide for new investors. This is the foundation most people skip, and that is exactly why they make mistakes. The Kindle edition is available instantly, and the hardcover includes worksheets to help you build your system today. The link is in the description. Subscribe to CoinOps for full market breakdowns, institutional analysis, and the signals shaping crypto before they become consensus. Then tell me what matters most from here. DTCC's October launch, continued Link outflows from exchanges, expansion of the United Stables integration, or the point when Chainlink's growth becomes creating measurable demand for Link. Stay locked.